So what this webinar is going to cover is the first stimulus package federal, second stimulus package federal, which we're actually going to start with, the state stimulus package, ATO support and what they're offering at the moment due to this COVID-19 situation, what is stand down and really what you should be doing with your employees, what you should do with your rent, a bit of an action plan from what we've been discussing with clients. And then at the end, I'm just going to answer any questions that I haven't covered throughout. I'm going to try to be pretty general in what I go through, but if you've got specific, I'm at home, we're in lockdown, so let's get through as much info as we can. Just going to start with our webpage. So the guys have put together some really good resources in regards to the stimulus packages, what's available. We've summarised that, we've gone into detail. In our knowledge base, we've come up with a business continuity plan. So that's a good one for you guys to go through and see what's available for your business, what we're doing to try to assist you through this. Now, in regards to the blogs, there's, I don't know, 50 blogs up there now. The most recent 4 are what you want to be looking at. So that's what you're eligible in regards to government payments and, you know, the income support for individuals, especially for you business owners when we're having to, you know, stand employees down or put them out of work. You want to be able to give them something to see what benefits they're entitled to. Stimulus, it's not stimulus, it's a safety net. So that's probably the big message that's come out of late. The first package related to asset, you know, investing more. So looking at assets and should we be spending more money? And at the moment, we shouldn't be spending more money. We should be preserving our cash. And I think the second stimulus package sort of renaming that as safety net, I think is the right measure. So the big one that's come out of these tax-free payments up to $100,000 for small business and not-for-profits. The solvency safety net, access to working capital, sole traders and self-employed, what they're eligible for, and temporary relief for some of the Corporations Act. Okay, so the big measure's been this tax-free payment up to $100,000 for small businesses and not-for-profit employers. Now, this is an increase on the initial tax-free payments for employers to a maximum of $50,000. The big change was in Stimulus 1, the payment was going to be for $25,000 based on 50% of your pay-as-you-go withholding. Now, the big change is that's gone to 100% of your pay-as-you-go withholding for that period. And in addition to that, there's going to be an additional second round of payments up to a maximum of $50,000. And those payments are going to start flowing in from July 2020 and September 2020. So what that means for your business is if you have pay-as-you-go withholding of up to $50,000, you're going to get a $50,000 credit in your March BAS. If you have pay-as-you-go withholding of a lesser amount than that, you're going to get 100% of that back in your March BAS, and then 50% of that back in July and 50% of that back in September. If you withhold less than $10,000, you're going to receive $10,000 in that March BAS. So that's going to be a credit on your integrated client account. And the key measure there is the key thing to realize there is it's all in relation to your March BAS and the pay-as-you-go withholding that's withheld in that period. The questions that we've been receiving from clients there relate to, you know, should I be on pay-as-you-go withholding even if I previously wasn't a witholder? So let's say we're a mum and dad trust. We've received trust distributions from our entity, and that's the way we look to receive our profits. Should I now register for pay-as-you-go withholding to try to get some of this stimulus payment? And the answer there is no, you cannot. So what we're seeing is that to get this measure, you needed to be registered for pay-as-you-go withholding from the 12th of March 2020. So the ability to us to backdate those registrations has has been cancelled from the ATO, so we cannot go and do that online. So it looks like I've got a few questions in relation to that measure. One's just saying I'm a bit echoey on the comments. So Melanie's asked the question, this might be covered later. What if you have a family trust with no withholding in the past? So that's what I'm trying to cover there. So if you've got a trust and you're not registered for pay-as-you-go withholding at 12th of March 2020, you're not going to be eligible for this stimulus. Now we're waiting on some integrity measures to come through from the ATO, but everything we read suggests that you're not going to be eligible for this stimulus. I'll answer any more questions in relation to that at the end. So the second measure in relation to the stimulus is this solvency safety net. So that's a temporary 6-month increase to the threshold at which creditors can issue statutory demands from an entity from 2,000 to 20,000. And the bigger change from the amount is the increase in time companies have to respond is extended from 21 days to 6 months. Now, the other change is directors are also provided with temporary relief from personal liability for trading whilst insolvent, and that's for 6 months. So we're still waiting for a bit more clarity on what the trading while insolvent piece looks like. But there's a clear direction from government that at this time, we don't want you chasing your creditors. So, if you issue a stat demand trying to chase a customer to get them to pay, they've got 6 months now to respond. So, that's a long period of time, and I think it's discouraging you from chasing those creditors. The third change in the stimulus is access to working capital. Now that's the introduction of a coronavirus SME guarantee scheme protecting financial institutions by guaranteeing 50% of the new loans to SMEs. Now this measure is aimed at the financial institutions. Now what that means is they're the ones that are going to decide whether your business is eligible for a loan, not the O, and they're going to have a lot stricter lending criteria than what they've had previously, given the recent changes in regards to lending. So the fourth point is sole traders and self-employed eligibility for the job seeker payment. So this eligibility access has been relaxed, and it's going to include self-employed and sole traders. So what we're seeing is shorter waiting times in regards to eligibility for job seeker payments. The fifth measure is temporary relief from some of the Corporations Act requirements. So part of that's the trading insolvent piece. There's also some stuff in regards to AGMs and delaying dates, but the reality is there's not a lot in there for most attending this webinar. There was also some changes to individuals. So we've got deeming rates introduced and supplements increased. So when we talk about deeming rates, broadly speaking, this impacts the pension tests for individuals who have had their assets significantly reduced because of the reduction in markets. So those rates are going to mean more pension eligibility for certain, I'd say, eligible age pension individuals. And the supplements increase is in relation to job seeker payment. So what we're going to see is a temporary coronavirus supplement of $550 to existing, job seeker Austudy participants, and a second one-off stimulus payment of $750 to be paid automatically to other members, which is going to happen in addition to the $550. And those payments are going to, I think, be made from, I think it's 30th of June. So just looping back to the first stimulus package, now the key points of that were the instant write-off measures were increased. We've got wage subsidies for apprentices, the early release of superannuation, temporary reduction in minimum superannuation drawdowns. That's in relation to individuals who are drawing pensions from their own super fund, and changes in the bankruptcy safety net. So the instant write-off measures, given what's happened in the last couple of weeks, we're not seeing a lot of clients take that up. So that's where assets under 150,000 now qualify for an automatic tax deduction. Tax deductions aren't what we're looking for at this point. We're looking for cash. Now, just moving back to it, that was previously 30,000. The extension's to 150, and that's for assets purchased before July 2020. Our expectation is that that measure will get extended to beyond July 2020. Hopefully we're in a position where the economy's recovered. Assets over 150, they're now going to receive a 50% deduction in the current financial year. Now that'll be extended till July 2021, but like the instant write-off, we expect that measure to probably be extended with some further stimulus to come in, 3 and 4, where we're expecting the government to try to get us to reach in our pockets and spend a bit more money. Wage subsidies for apprentices and trainees. So employers with less than 20 full-time employees who retain an apprentice or trainee will be entitled to a government-funded wage subsidy. This subsidy will cover 50% of the apprentices or trainees' wage from January 2020 to September 2020, and it's a maximum of $21,000 per employee. Now that's going to cover 50% of, I think, most trainee or apprentices' wages, given 21,000 is a rebate, it's 50%. So you'd need to pay your apprentice or trainee 42,000 over a 9-month period, and I find that most trainees or apprentices are paid less than that. Now, to qualify for that, you need to have less than 20 full-time employees. The third measure was the early release of superannuation. So this relates to individuals in financial distress, and it allows them to access up to 10,000 of their superannuation in 1920 and a further 10,000 in 2021. Now, these withdrawals will be tax-free and will not affect the Centrelink or Veterans Affairs payments. I don't have the detail there, but that's available for businesses who have had a 20% or more hit on their profit in the current last 3 months this financial year. That 10,000 cannot be accessed until post April 27, and to be eligible for that, you need to apply through your MyGov login credentials. If you've got a self-managed super fund, we're waiting on some clarity there on how you're going to access that 10,000 if you choose to do it. Obviously, tough environment to. My super's dropped significantly, and I'm not sure I'd want to be taking $10,000 at this point to reduce that balance even further. But if you're in the situation where you have to withdraw and you do have a self-managed fund, we're still waiting for guidance on how that's going to play out. We've had temporary reduction in the minimum super drawdown rate. So that's for those of you in pension phase, you don't have to draw as much out of your superannuation in 1920 and 2021. And the fifth one is this bankruptcy safety net. So it's a 6-month increase to the threshold for the minimum amount of debt required for a creditor to initiate bankruptcy proceedings. And that's gone from 5,000 to 20,000. So I'm just going to answer a couple of questions. What a sham. If your March BAS only covers pay-as-you-go for March, is the credit only based on the March figure, or does it take into account the January and Feb pay-as-you-go already lodged and paid? Good question, Bonnie. It takes into account the Jan and Feb pay-as-you-go already paid. So if you've withheld 16,000 in Jan, 16,000 in Feb, and 16,000 in March to bring you to that total of 50,000, you're going to get a $50,000 credit in your March BAS. Mark, so I shouldn't pay my creditors for 6 months. Look, it's a possibility. They're not going to chase you they're not going to be able to put you into bankruptcy if you don't pay them, but what they will be able to do is stop supply. So you still do have some measures as a business to control your creditors and make sure they're paid. And The main one is that stop supply. So if you're not going to pay your creditor for the next 6 months, I don't think he'll be supplying you with goods. So I'll keep going. State stimulus package. So the big one there is this payroll tax refund. There's also land tax deferral, liquor licenses waived. We can't really operate a liquor business in this environment, and some other measures. So big ones is payroll tax refund. Now the first measure in this package relates to tax. It's for businesses with a payroll of less than $3 million, and they'll receive a refund of all payroll tax returns for the 19-20 year, and they'll also get payment relief for the July to September period of 2021. Now, for those of you who don't know what payroll tax is, that probably means you're not paying it. So payroll tax is for businesses who have a payroll of over 650,000, and they pay a rate of 4.85% on all wages above 650,000. So if you've got a business with payroll of more than 650, but a total payroll of less than $3 million, you're going to get a 12-month holiday on your payroll tax. State Revenue Office will be contacting all these businesses, and what you're getting is an email from the State Revenue Office to, basically fill in the form, confirm that your wages will be less than $3 million for this calendar year, and you'll receive those. We're expecting those refunds to start flowing over the next week. So all businesses must continue lodging the payroll tax returns, even if payment isn't required. And for employers that are a member of a group for payroll tax purposes, the eligibility threshold will apply to each employer individually. If you've got questions in relation to that, just push back to your manager at the field group. We can help you through those lodgements and what needs to be done there. Land tax deferral. So land tax payments for the 2020 year can be deferred until 31 March 21 for eligible businesses. If you're eligible for the deferral and have already made payment, you're going to receive a refund. If you haven't made payment, there's no need to pay. Now, the eligibility for this is you must have at least one of your properties subject to land tax and be a non-residential property, which include commercial properties, industrial properties and vacant land. Now, your total land holdings must be below 1 million to get access to that deferral. Liquor licenses fees waived. Just looking through the participants here, I don't think we've got anyone in the hospitality industry, but obviously tough times for them, and they need that relief. Other measures, so rent relief can be applied for any commercial tenants in government buildings. Private landlords are also being encouraged to provide some relief where possible. I'll go through that later in the slides. A total of $750 will be released into the economy, with the government paying all outstanding supply invoices within 5 days. So the government's urging everyone in the private sector to do the same where possible. Going back to Mark's question before, do we not pay our suppliers for 6 months? Well, the government's urging us to pay them in 5. There's another $750 that's going to be released into the government. Sorry, so it's a double up of the slides. An additional $500 million will be allocated to establish a Working for Victoria fund to try to bring some new jobs into the economy. So ATO support, and what we've seen today is the ATO automatically deferring payments when we contact them. So there's a deferment of up to 4 months of the payment date for amounts due through BASs, income tax assessment, fringe benefits tax and excise. So what that means is we still need to lodge these activity statements, and we need to lodge them on time to be eligible for some of these tax-free payments, but there's going to be a deferment when applied for when your business is impacted by COVID-19, which means you're not going to have to, the due date for payment for these BASs is going to be extended by 4 months. Now, they're also allowing businesses on a quarterly reporting cycle to opt into monthly GST, and and they will get quicker access to GST refunds if they're entitled to them. So what we're looking for there is businesses that maybe don't pay GST on their income, so they're in food or some sort of other GST-free environment where they're getting GST refunds. We can shorten your reporting cycle so you get those refunds quicker. They're also allowing businesses to vary pay-as-you-go instalments for March and get back any credits that you've paid in tax for September and December. So for some clients, that could be a quick release of cash flow where we're able to go back and grab any of the prepayments of tax that we've done in the September and December quarters. Fourth ones, they're remitting any interest and penalties incurred after 23rd of Jan 2020. No mention on any interest or penalties incurred before January 2020, but we're expecting the ATO to be lenient there. And if you're in a position where you've got debts owing to the ATO, I'd be contacting your accountant at Field Group to see if we can, try to reduce those interest and penalty payments where they've been applied. And finally, they're working with affected businesses to help them pay existing and ongoing tax liabilities, allowing them to enter into low interest payment plans. So assuming that's going to be after this COVID-19 situation ends. I'll just go through some questions in relation to the stimulus now. So John's asked, the pay-as-you-go credit will also apply for the Jan 2020 BAS as well as the March 2020 BAS. So a matter of being clear there, in the March BAS, you will receive a rebate of 100% of the pay-as-you-go withheld up to 50,000. In the June and September BASs, you're going to receive a rebate of 50% of that amount. So if you've withheld, let's say $8,000 in the March BAS, you'll get the minimum payment, which is $10,000. You will also get a $5,000 payment in June and another $5,000 payment in September. So what are the key recommendations for a sole trader of a small business where up to 50% of the work will cease due to the inability to see clients? So we haven't seen a lot of measures in relation to sole traders at this stage. We're expecting, sole traders to be the focus of stimulus or safety net packages 3 and 4. Now, for now, if your income has been reduced by 20% or more, you're eligible for the drawdown on superannuation of $10,000 by April 27. If your income has ceased completely, you're eligible for the job seeker payments. If your income is still at a rate where, you're not eligible for job seeker payments, at this stage, there's nothing in these stimulus measures that are going to assist you. What we're pushing with our clients, especially ones with rent, is to contact your landlord, stay in touch with them, keep them in the loop to see if there's any opportunity for them to reduce or provide rent-free periods if your business is impacted by COVID-19. Now, we sit on both ends of the spectrum here. So we've got clients who are tenants and we've got clients that are landlords. Now, what we're seeing is that clients that are landlords are understanding of the client situation. If their business has no revenue, they're not going to be able to pay their rent, and the landlord wants a tenant at the end of this situation. So I think you do have some power as a tenant to push back onto your landlord for a reduction. We're expecting, it could be tonight, could be next week or the week after. We're expecting some guidance from government as to what rental reduction they're going to recommend, what changes they're going to make to the Landlords Act to allow that to occur. Because at this stage, there's very limited lease legislation sort of allowing you to get out of those leases and apply those reductions. We've prepared a letter that we can send to your landlords on your behalf if that's the way you want to go. Otherwise, you can grab our template and change it and send it yourself. In those slides there, you've got an idea of what we're proposing in regards to that letter. What should you do with your employees? So if you're an employer, obviously a tough time. Casual workforce, unfortunately, is going to be the first that's cut. So if you have a mixture of casual and permanent employees, it's an unfortunate reality that your casual workforce is likely to be the first area where costs are saved. So what we're looking at there is cutting shifts. Casual workers, they don't have guaranteed hours or wages. So as an employer, you're in a position to stand those workers down if your business can't support them. Now, what I'd say there is it's now the government's time to support your wages, not you. So if your business is forced with huge reductions in income, you shouldn't be feel guilty about putting these workers out of work. It's just the reality of this situation. If you don't have casual employees, we're saying, look, talk to your workers, but where a business is in distress and needs to reduce wages to try to remain viable, it can't forcibly alter work conditions. You need to be speaking to your employees and get agreement from them that their understanding of the business's position and agree to those work conditions. At the field group, we've unfortunately had to reduce some of our admin loads hours, and by me being open with the team, they've accepted that and taken one unpaid leave day per week, and they didn't have to accept that, but they accept that knowing on the back end of this that there's going to be more work for them. Workers under an award must be consulted with, and most awards have strict processes to be followed in regard to alterations to hours or days. So if you've got a full-time employee and they move to a 4-day week, they've gone from a full-time employee to a part-time employee. So really important that you get HR advice around that. For non-award employees, employers, you need to work collaboratively with these employees to understand whether alterations to their conditions are workable for them and workable for us, the employer. We're getting a lot of questions around stand down. Under Fair Work stand down provisions, an employer can stand down its workforce without pay in limited circumstances. Jobs are not terminated, simply wages are placed on hold. So this is an advantage over redundancy in that redundancy payments are not made and the stand down can be selective. So to be eligible for this, you as an employer must be able to demonstrate that there is a stoppage of work, that the employee stood down cannot be usefully employed elsewhere within your business, and the cause of the stoppage must be one that the employer cannot be reasonably held for. So the example there is that enforceable government direction to close and no ability to work elsewhere. Stoppage of work due to lack of supply beyond the employer's control. So that's the Qantas scenario. Large amount of workforce in quarantine or ill that it's a situation where the business cannot continue, or an inability to get key components or something in the supply chain that's beyond circumstances which you can control. Caution needs to be taken with these measures. It's likely that not available for businesses that are downstream. So the example there is a supplier of treadmills may not be able to rely on gym closures to stand down, as they could arguably supply private customers. So we're really pushing you to get HR advice there to see if these stand down provisions can be applied. My personal view there is that it's unlikely you're going to get an unlawful termination case in the current environment. If you're in a position where you've got a business that's been impacted and we think you've got a viable business 6 months from now, I think standing those employers down, getting them access to job seeker needs to be a priority, because on the back end those employees are going to have jobs. Redundancy, so where standard provisions are not available, an employer cannot continue to employ permanent members of staff due to impacts of COVID-19, and you've spoken to them and annual leave or unpaid leave isn't viable, then you can look to consider redundancies. Now, redundancies at this time are a tough one because you've got to have the cash to pay these redundancies. So I really do see that as a last measure. Make sure you've spoken, to your employees, consulted them to see if they can reduce hours. We'll consider taking unpaid leave. So I've got 5 action items sort of to finalise that your business should consider. So one's preserve cash wherever possible. So that means speaking to your supply chain, trying to let them be aware of your situation, see if you can extend payment terms to try to keep everyone in jobs, maximise your ATO stimulus payments and your payment terms with the ATO to try to preserve as much cash wherever possible. Stay informed on the stimulus packages and what incentives are available to you. Have a good continuity plan. We've got one on our website that I think is a really good guide to follow. That's available just under our resources tab. It's about an 8-page document, so it's lengthy, but I think it's something that's worth the time going through. Be open and honest with your staff. Having experienced this situation personally, I think keeping them involved of what's happening with the business, what's going to happen with revenue, what levers you plan to pull if your business does slow down, I think is the right way to go. And ask for advice. We're the Feel Group, we're here to help. And I think we're all in this together to try to, come out of it with businesses that are thriving. So sorry for the start, guys. But happy to take any questions as they come through. So in regards to the instant write-off, Greg's asked, are there assets excluded from receiving this benefit? For example, there's only certain assets for a company. So instant asset write-off, what we're looking for is plant and equipment assets that are eligible for that. So if you're, for example, fitting out your premises, there's going to be some of that fit out which is building and therefore not eligible for the stimulus payment because it would be building works. So those building works are depreciable over 40 years. But any asset that's plant and equipment, be it machinery, motor vehicles, machines of trade, they're all going to be eligible for that instant write-off as long as the asset is installed ready for use before 30 June 2020. Peter, if you stand out an employee that has leave owing, do you still have to pay out their leave? We're getting conflicted advice there. That the thought is if you stand them down, their entitlements continue. However, there's no requirement. The advice we've got at the moment is there's no requirement to pay out those leave entitlements. And that if you do pay out those leave entitlements on the back end, it may impact their job seeker eligibility. Can we write off assets bought in January? The assets needed to be bought before the stimulus. So what we need is invoices dated post 12th of March 2020. Now keep the questions coming through, guys. Is it safe to keep cash in the bank? That's something I'm not qualified to answer. What I would say is that the government backs all cash in the banks up to 250,000. So I think it's unlikely that you're going to have issue with cash in the bank. Is the self-managed super a better option now? So another one which would have to defer to a financial planner. If you're needing to access that $10,000 payment, you've got to do that through MyGov, and that's going to be an automated process where you complete a form on MyGov. That form will then go to your superannuation fund, and that'll give them the trigger to pay out that $10,000 payment. If you're in a self-managed super fund, we still are waiting for advice as to how that's going to be processed. What we do know is that you cannot draw out that amount of money before the 27th of April, and we're expecting some sort of form to be released within the next 1 to 2 weeks. When do we expect to see the payroll tax refund, and ditto for BAS and IAS? So the payroll tax refunds, the eligibility for that has come out through the website today. And what we're seeing is emails getting sent to eligible clients throughout the day to day. We expect that to continue tomorrow and the next day. And the State Revenue Office has been pretty clear that they want to be quick in getting that cash into the business's hands. So we're expecting those payments to flow immediately. In regards to the BAS and IAS, it's going to depend on lodgements. So we've got March BASs that we can lodge on 1st of April. That's going to then put them in the system. And if you end up with a credit out of that BAS, we're expecting the payment to flow within 14 days of that lodgement. Now, for a lot of clients, I'll clarify there, you may not receive an actual payment out of the stimulus one and the $50,000 tax-free payment that could come on that March BAS. It's likely to just be a credit on your activity statement account, and if you've got a debt on there, that payment's going to be used to offset that debt before paid to you. Are there any stimulus payments available for family trust with no employees? So at this stage, there's no stimulus for family trusts which have no employees. If you're a family trust and you're registered for pay-as-you-go withholding and you were active as at 12th of March 2020, you will get the $10,000 payment if you have some sort of activity. If you have no activity, at this stage, there's no tax-free payment. The question around that related to, should I register? So I'm not getting any of these stimulus payments. So should I register for pay-as-you-go withholding now to get access to that? And the advice we're getting through legislation is that they're not going to allow you to register for pay-as-you-go withholding post 12th of March. Any registration post 12th of March won't be eligible for those payments. Would it be advantage to employees if they would have paid a small retainer wage instead of a full sedan down? We're not HR experts, but the advice we've got is that if you pay that small retainer, you're going to jeopardise your employee's ability to claim that job seeker payment. So you've got to be careful there that you do the right thing by your employees and put them on these small retainer wages, but actually impact their ability to access some of the job seeker payments. So the question is, we have an outstanding BAS payment for the second quarter, which we were about to pay. Are we best advised to hold on to that money or pay now? Will non-payment affect our ability to claim the COVID-19 support? So all payments for BAS, we can get those deferrals for up to 4 months. So, if we go back to our action plan and we're saying preserve cash, I think paying that money to the ATO now is probably not the best decision when we can get a hold on that due date until 4 months post when it was due. So the advice there is to hold on to that money if your business is impacted by COVID-19. Now I'm of the view that nearly all businesses are impacted by this COVID-19. So I would be holding that money and contacting to get the deferral. Will non-payment affect our ability to claim COVID-19 support? Non-lodgement will impact your ability to claim COVID-19 support, but not non-payment. So the key message there is get your lodgements in, because that's what's going to generate that tax-free payment. Another question. On your SMSF, is your business landlord, is a rent reduction allowed? So we're still waiting for advice on that. We're actually expecting advice tonight in regards to landlords and what measures the government's going to put in to combat that. I think if the business is actually impacted by COVID-19, I think we've got to look, and we look at super funds and we look at market rents. If the market is impacted, the market rent can be reduced. Okay, does there have to be a complete stoppage of work for stand down to be okay? Or is a partial stoppage directly attributable to COVID-19 enough? Question today was in regard to hairdressers, so and barbershops. So we look at yesterday, barbershops, they didn't get completely shut down. What they got was limited to a 30-minute haircut. So their business was not shut down, but it was impacted. And the advice we've had is that you could not stand down workers in a hairdresser in relation to COVID-19, because the business is yet to be directly impacted. Now, I find that to be a pretty harsh interpretation of impact on COVID-19. So my view is that COVID-19 has impacted those employees, and I'll be looking at stand down measures on the back end if you feel that that business is going to be viable, at the end of this. Yeah, how do they work out who is impacted and who isn't? So we've got a list of entities that the government's released that have been directly impacted, and at this stage, those are the entities that that we're working off in regards to stand down and who's been impacted. All right, guys, we've done pretty well. I won't close it yet. I'll just wait for a few more, see if a few more questions come in. So one, if the pay-as-you-go credit applied in July and September is not fully used, can it be carried forward indefinitely to the December and March BASs? So the credit that's applied is refundable if it leaves your integrated client account in credit. So if in July, let's say you're a maximum withholder, so you're going to get a $50,000 credit in your March BAS, you're going to get 25 in June, and you're going to get 25 in September. If in July that credit of 25,000 isn't used because your business is significantly reduced, you're going to get a refund of that 25,000. So that credit won't be carried forward, because if you're not using it, it's actually going to be refunded. Okay, so if you're on a payment plan for BASs, should we hold off or is it overdue to continue to pay as possible? So if you're in a payment plan, the push there is to contact the ATO to get that payment plan put on hold. And what we're seeing is those deferrals are getting automatically approved given the current environment. So, if you're a business that hasn't turned a cent since the shutdown on Sunday, what can I expect from government? That's going to depend on, what type of entity you were structured as. So if you were if you were in a trust and you did not pay any pay-as-you-go wages, there's very limited amounts in the stimulus for you. If you're a company with withholding, it's a different story. So it's really one where you're probably going to have to push back to someone here at the field group to go through your situation, so we can give probably some more specific advice there. who should I talk to at TFG if I have specific questions relating to the business stimulus package, you or my accountant? So I'll be pushing back to your accountant at TFG. I'm not sure who that is. Otherwise, you can push back to me. We're all working from home at the moment, so I'm very available to answer any questions. Is there any directive on where you can or must distribute the pay-as-you-go credit, or does it simply become cash flow? So it simply becomes cash flow. So if you're getting that $10,000 payment, you do not have to use that to, to pay for employees. You can use those funds any way you choose as a business owner. So I'll close it there. This is our first go at a webinar. We had a bit of a rough start with echoing, and I think my kids might have been on iPads or something hitting the Wi-Fi. So hopefully that's worked. Any questions, come back to me. We'll put up a recording on our website of this, so feel free to share. Cheers.